Hey, I was talking to an investor. He hasn't invested with me, of course, but uh, he was talking cash flow properties, income properties, and that's a great question because there's a lot of different venues out there that you look at and you say, hey, this is going to be a big winner in the numbers and the stuff. But I want to kind of go through the types of way to do it and why maybe you are or not seeing cash flow. The number one thing out there right now, especially for European people, is to buy, refi, and buy again. Now, that's not a bad strategy, but you may have money into it. I had a client who refied, and he's got to put like I don't know. After the refi, he's still got about 5,000-6,000 bucks into it, and you would have think you would have took his house. You think you would have just took his big screen out of there and everything that he lost. It was just way too much money. If you're that kind of investor, then you probably shouldn't be in investment real estate because, you know, investment real estate does take some time, but it's just according to how you do it. So you take a cash buyer, they're going to get immediate cash flow. My projection or my nets on my website there, realincomeproperties.blogspot.com, I show the net after, what the property actually does as far as income net. Now your payment and all that has to be subtracted from that, but I don't know what your mortgage payment is. I don't know what kind of money you have down, but when you're doing the buy refi, when you're refining the stuff or whatever you're doing with it, you're buying it, you're getting the construction money. That's going to take some time. It'll work out in the end if you have time, but you may have a little bit of money in it. That's okay. It's all my stuff has equity, and this particular client has almost $35,000 equity in his property. So, but he just didn't want to put one penny into the property. Which, again, if you're like that, you might not want to invest. But if you're doing the buy refi, it's okay to do, but be patient with it because your profits are not going to be near what a cash is, obviously, because you have to pay that extra mortgage. So just take the mortgage payment out. And I don't mean the insurance. All the insurance and stuff is figured, but you have to take that mortgage payment out and you'll show the net. Then I have some investors who take classes. They never really buy. I was talking to a gentleman that owned a pretty good size one, and 90% of all investors that go to these particular classes never buy. Classes are good. Good way to network, a good way to maybe find some people that have money. But in the end, they're just classes, they're just theory, they're just, every area is different. What location do you buy? They don't really want to give you too much detail. And sometimes when they do, it's the detail that puts money in their pocket, not yours. So just be very careful with that. But if you're in classes and stuff, there's partners you can get and all that. With partners, you want to be careful with too. Who owns the bulk of that? Is your partner putting money in their pocket, getting the properties, and you're not getting any of that? There's a lot of white enveloping, they call it, going on in that. So if you have someone who's in a class and they say, hey, you got to use this person, this person, this person, you're probably not getting the best prices, and there's probably money going into their pocket. So take that into consideration. You want a full disclosure on every property if you have partners. You want to know what they're making, what they're getting money for. Maybe they deserve it. I don't know, but you just have to really watch all that. Cash buyers are usually the best. I have a bunch of those. Buyers with homes, they come right out and start making money right away, and that's income. They don't complain about, hey, I'm not making any income, because they are, and their rents go up. We've had people in there as long as 6-7 years. We put over $60,000 in a lot of people's accounts, and net. That's after taxes, insurance, and property management. It's not gross; it's net. So that's really, really good to use cash. Now, owner financing is another one, but you got to find somebody willing to do it because it takes a lot of time. And if you do that, then it's just you're going to have to take extra time to do that, and you're going to have to pay somebody to do that because a lot of times, like for me, I'm not going to I'm going to look for my own owner financing, and if I do have somebody come through or or I do have houses that I'm owner financing, and it's usually ones that I'm finished with and lease optioning. But you can owner finance too. You just got to find somebody to do that. Wholesaler. Wholesalers are a total different breed because they're not licensed. They don't have E&O insurance. They have nothing. So you just have to really be careful with that. I've seen stuff $1 million off on their on their rehab. It's really kind of funny because they don't know what they're going to sell you the property, take the money, and run. So wholesalers, you really got to watch. You got to watch their values. You got to watch everything. They don't have the softwares that I have. I know. Well, I got Zillow. Well, Zillow gets sued all the time about their values. I get mine from the MLS. It's actually, audited, checked. Only licensed people can get on that website. So watch out for wholesalers. What's the best property for you? If you're on a limited budget, you don't have super deep pockets, and I do them myself. Is homes. Homes are the best. I made millions of dollars on homes, and the way I do that is I buy them. I buy if they're a good deal, they're a good deal. If they're not a good deal, they're not a good deal. So these are the different things that I do for myself. I bought probably 50 homes. So, I always do it, and I do it for my investors. I think homes are more consistent. The tenants stay longer. We can get warranties on them, and the repairs and stuff are way less than when a tenant moves out the last two houses. We've had $900 and $600 repairs. That's it, because we get good tenants. And homes are just a better way to do it, unless you're a multi-millionaire and you can buy apartment complexes, which I could do that, but I don't do that because I see nothing but headaches there. And then they start beating on the property managers, and they want 8% this. When you're looking at property management, it's a tough deal. And when the owner starts beating on all that, you really have to be careful with all the situations that you have on that, because they're your boots on the ground, and they need to be paid. I see a lot of property management fail. 90% are bad because they don't make any money. You've got to make money, and if you don't make money, then the property management will go away. So let's look at my opinion on all this, if you want it. My opinion is you buy houses, you stay consistent, you got nice, easy cash flow. Average tenant stays 24 and a half months. Equity goes up. You got more buyers in the market than you do apartment places. All that. And the problem in Cleveland with a lot of the apartments are super old. We got one that's got, an eightplex that's, the plumbing was in the walls. You couldn't see it when we, did it. And it's got too small plumbing, so they're going to have to replumb that whole place. That's going to be a lot of money. So when you're looking at stuff like that, houses, you don't run into that. If you got to replumb something, it's not that expensive. We use PEX, and it works great. So we don't have to bend it or anything. We just take it through there and it goes. But houses are always better. They're easier to deal with. You make a lot of money, but you got to be patient. Everybody wants to be the big dog on the block on their first property. So that's why there's a lot of multiplexes sold. But they're the hardest ones to rent, the hardest ones to find good tenants, and they have shorter times in the buildings than any other ones. So if you're looking for real estate, you want to get somebody who's done over 1,200 plus properties. I've done 2,000 leases. I've done a lot of properties, a bunch of real estate. We have our own rehab team. Call me. I'm Brett. I'm with Key Realty. My number's there, 216-703-5740. Better property, exceptional results. Go to realtorproperties.blogspot.com and check it out. Thank you. Have a great day.